The future of humankind rests on this commodity supercycle. Now, why is that? Well, in today's episode, we're going to look at commodities and their pivotal nature to the economy and civilization as a whole. Before we get started, though, nothing in this video is financial advice. I am not a financial advisor. Do your own due diligence. It's your money, your responsibility. With that said, let's go ahead and dive in to our first chart here. This is the annual wholesale electricity prices by country. And here you've got this dark blue line, which tells us our 2022 prices. And in light blue, we've got the 2017 to 2021 average wholesale electricity prices. And as you can see across all of these countries, Italy, France, Germany, UK, Spain, Japan, the 2022 prices were multiples higher than the 2017 to 2021 averages. Electricity prices went through the roof. With no exception. Here in the U.S., where I live, they weren't as bad. Electricity prices didn't go up by a factor of, 4x in terms of Italy, another 4x here for France. We had about a doubling in electricity prices here in the United States, but nonetheless, this is the new normal, so to speak. So electricity prices are going up. And now why is that? Well, as you can probably guess, it's because of the natural gas shortage, the energy shortage in general. Now we are flush with natural gas. At the moment, we do have a supply surplus, which is why the price of natural gas is going down due to the rather lucky circumstance in Europe and across the globe of warming winter. It has been a substantially warmer winter. I think along the lines of a 3 standard deviation move from the average, which is highly unusual. But this goes to show you, nonetheless, 2022, we still saw massive upswings in the price of electricity because of this energy shortage. Next on our list, we've got, we can kind of look at this from a European view. We've got everything from coal, hydro, gas, nuclear, wind, and oil. And these are the biggest sources of electricity for all of these different countries. What's interesting, though, is that for places like Germany, which is sort of the shining, pearl, the shining jewel of Europe and in the world in terms of its usage of renewable energy. Their biggest source of electricity came from none other than coal. So it could be clean coal. I don't know. That's an oxymoron, by the way. There's no clean coal. But nonetheless, you've got countries like Sweden and Norway here in Scandinavia using hydro, and Iceland as well. But as you can see, for the rest of Europe, for the most part, is either using coal here, as you can see in Germany, Poland, Czech Republic, Turkey, Bulgaria, Serbia, or gas here in the UK, as you can see, Netherlands, Italy, Greece, or oil. Here in Cyprus, they use oil. So if you kind of break this down on the chart in here, this chart below, the biggest electricity generation by source came from nuclear. Yep. Uranium. But right below that, you had 20% natural gas, 14% coal, 13% hydro, 13% wind, 6% solar, etc. So nuclear, this is the future, guys. If we want to maintain our standard of living, it's going to move to a nuclear future. So I anticipate this 25% of all European electricity generation for nuclear to go up substantially in the years ahead, overtaking natural gas, coal, etc. And for all this talk about renewables, solar and wind make up a collective 19% for 2022. Solar making up 6% and wind making up 13%. Speaking of energy usage and in particular coal, Pakistan is planning to quadruple its domestic coal firepower in a bid to move away from natural gas. And at the same time, China, their thermal coal hits a 1-year low on slow industrial recovery. So there had been a lot of anticipation that China would have recovered a lot faster in 2022 and beyond. Given their COVID shutdowns. But nonetheless, China's reopening has been a lot slower, and because of that, coal demand in China has come down, which leads to a slowdown in the coal price. So there's two sides to every coin here, guys. But nonetheless, the only reason that we're kind of seeing this chopping sideways move in coal at the moment is that China really hasn't fully opened up yet. Now ask yourself this: is China demand going to more likely to increase or to decrease from this point on? And I think you'll find your answer in terms of which direction coal will be heading towards on that, depending on the answer to that question. So this next chart here, these are the top commodity returns of 2022, and then also across each one of these years, stretching all the way back to 2013. And as we can see here, for 2022, the biggest returns across all of these different commodities was in the form of lithium. So lithium had a 72.5% return on the year of 2022. Before that, lithium was also the biggest returner, coming in at 442% for 2021. So lithium has been outperforming pretty much the rest of the commodity space for both 2021 and 2022 for 2 years now. Right below that in 2022, we had nickel. Following that, we had natural gas at 19%. And then following that, we had corn. Now, we had a big move in coal here in 2021 as well, up 160%, followed by oil at 55% in 2021. So the common factor here is the battery metals are playing a big role in the recent price moves in commodities. And why is that? Well, we've got to build out this huge fleet of batteries to sustain these renewable grids and these electric vehicles. There's going to be a lot more demand coming our way to build out this sustainable green future by way of the battery metals, lithium, nickel, cobalt, etc. And speaking of which, the EU and the US, they are advancing a buyer's club for EV battery metals. So the West aims to rely less on China and promote clean energy technology. So this is what I'm talking about, guys. The US and the EU, the collective West, are going to look for ways to wean themselves off from China as a producer for their battery metals, which is China's currently the biggest producer of rare earth metals today. But here it says the U.S. and European officials are discussing how to set up, let me make this bigger, or how to set up a new group of allies that cooperate on procuring minerals used in clean energy, hoping to rely less on China while patching up a rift over U.S. subsidies for electric vehicles. So they are really trying to go through with this electric vehicle future. So in order to create this same future, we are going to have to extract a lot more of these minerals, a lot more of these metals, these rare earth metals, these lithium. We're going to have to create more lithium mines, cobalt mines, nickel mines. All this stuff has to be extracted at rapid pace, at a higher pace than at any other point in history. So that's why we're seeing this huge run up in lithium over the last couple of years, as well as nickel. We've also seen a run up in rare earth metals too. So the moral of the story here, guys, is commodities are the future. They're not only the present, not only the past, but they're more of the future. The future is going to rely more on commodities than at any other point in history. And with that said, to kind of wrap things up, I feel like this is something that we should all keep in the back of our mind, something to have in our back pockets at all times. This was a study conducted in 1998. This was posted by Compounding Quality. If you don't already follow this Twitter account, I highly suggest you do. Lots of pearls of wisdom thrown our way from this Twitter account. But this is a 1998 study, and what they basically did was that if they looked at what would happen in terms of returns if an investor pumps in $10,000 into the S&P on the worst possible day for 16 years straight. So even if you, for 16 years, even if you invested $10,000 on the worst possible day on the S&P, you would see your fortunes rise to more than $540,000. Far better than a portfolio of treasury bills. So this is what the chart here represents. So you can see here, you've got your T-bills here in red, performance-wise, and then you've got your grossly mistimed allocation of cash, and nonetheless, you still generate a far better return than T-bills. So the moral of the story here, guys, don't try to get too cute with these investments. If something is cheap, then it's cheap, and, you know, in my opinion, I buy it. I don't try to, try to time bottoms, try to time tops. Studies have shown that the more you touch your portfolio, it's like a bar of soap. You're going to lose more of it in the long run. It's better to be right and sit tight than try to become too much of a busybody with your portfolio. The market's going to be right at the end of the day. And if you've done the research, you've done the work, then so are you. So that's what I got for you guys today. If you enjoy this kind of content, hit the subscribe button. It really helps me out with the algorithm. If you also enjoyed this video, go ahead and hit the like button. And until next time, guys, I will see you in the next video. Bye.